Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. After a two-day review, the Reserve Bank of India Governor Shaktikanta will unveil the fourth monetary policy of the financial year on Friday. The review by the six-member Monetary Policy Committee will indicate the course the RBI will adopt in the rest of the financial year as it seeks to strike a fine balance between maintaining growth and keeping inflation under control at a time when high crude oil prices and surging US bond yields are causing some concern. Joining me now to discuss what the MPC is likely to do are Saugata Bhattacharya, Chief Economist at Axis Bank, and Madan Sabnavis, Chief Economist at the Bank of Baroda. Welcome to the show. Madan, I'll start with you. What's the overall macro backdrop to this review that is currently underway?
So I think the macro backdrop has been more or less according to what the RBI had prophesied some time back. I think the only turning point has been the inflation numbers, because inflation for the second quarter has turned out to be higher than what the RBI had projected. So therefore, there could be some upward revision in terms of the Q2 inflation number. And that would also result in the overall inflation number for the year probably going slightly above the 5.4% mark. Maybe it will be 5.5%, not really very significantly different. In terms of growth, I think the projection for the for Q1 was bang on target for the RBI, and I see no reason for the RBI to bring about any change in their quarterly growth forecast, and this overall number of 6.5% will remain unchanged. There's, of course, some kind of uncertainty about the rural demand on account of the Kharif crop not being optimal, but that is something we'll get to know probably only after the harvest starts coming in from this month onwards. So if at all there has to be any revision in terms of GDP forecasts, it is something which could be taken on in the next policy. So as of for this particular policy, I think the macroeconomic indicators would be rather stable compared to what the RBI had projected in the last policy.
Saugata, coming to you on that very same point, the high oil prices have also caused some concern and added fuel to the mix, really, Saugata.
No, thank you, Siddharth. Thank you for having me on your show. So again, the troika of difficult conditions that we had seen in late 2022 seem to have again come back on the screen. So high US yields, the strong US dollar, and particularly high oil prices. All the fingers crossed. Oil prices have come down, and given the inventory levels, expected demand and supply situations, hopefully it will not again go back towards the 95, which will be a blessing for us. But the global financial market tight conditions definitely create trouble for all emerging markets, including India. RBI has shown that it is relatively independent of the G10 central bank policies, but we can't ignore. I mean, nobody can ignore the policies of a very large set of economies like the US, the Euro area, etc. So it is difficult, but tomorrow, again, I mean, these will not be, the global financial conditions will not impact the actual policy actions, but it will have a different conjoint moves related to policies, say on liquidity, exchange rate management, which I think markets are waiting with eagerness to see what these other actions are.
Madan, if a status quo is completely baked in, then what do you think the worthy members of the MPC are really splitting hairs on?
No, I think it's all a case of what you do to the repo. And I think there's been some bit of controversy. We have one of the members who has been against this concept of withdrawal of accommodation. So this entire concept of withdrawal of accommodation has been interpreted in a different manner. So is it a real kind of an interest rate which we're talking of, in which case there is still some bit of space for withdrawal of accommodation, meaning you remain where you are? Or is it a case of saying that you have to provide more liquidity to the system? There was excess liquidity earlier. Now that it's been withdrawn, is there a case for saying you need to withdraw more of this accommodation? The system is already in a deficit right now. So I think that's where the debate normally goes on. If you go through the minutes of the meeting, I think the dissonance is probably coming only on this particular area. Otherwise, in terms of the forecast for growth and inflation in particular, because that is the critical factor on the basis of which a decision on the repo rate is taken, I think that is more or less unanimous. So it's more a case of the stance where there could be a bit of debate about whether the stance should remain where it is or should it go to neutral, because it's normally felt that when you change the stance, it's a precursor to a change in the rate action in the in the future policies. But as of now, I think it's almost clear that the repo rate will not be changed right through this year. So if at all it happens, it's going to happen in the next financial year, because inflation numbers could come down only at that particular point of time, and therefore changing the stance at this particular point of time could be sending a different kind of a signal to the market. So I think that is where the basic discussion is going to lie, because I think it's almost a no-brainer that growth, inflation remains where they are, and therefore it has to be a status quo. But I think the point is given for future policies. I think that's what the market keeps looking for. Will there be a rate hike? Will there be a rate cut? If at all there's a rate hike, when will it happen? What will be the trigger in case there's a pulses failure and inflation crosses 6% mark? Will there be another increase? So I think these are the kind of signals which the market will be looking at from this entire commentary of the RBI governor tomorrow.
Shogato, the trade-off between low core inflation, which seems to provide some sort of relief to the policy makers, but persistent supply side and future volatility, especially from crude. Between these two, where is the MPC likely to find a balance?
So again, for all central banks, it is usually the core inflation, the non-food, non-fuel inflation, which is the key target. Just like in the Fed, the core personal consumption expenditure survey-based inflation is the target for the Fed. So normally for all central banks, and particularly in the last phase of the very high inflation that the developed markets have faced, obviously, I mean, in the last few months, services inflation has been contributing to the headline inflation. And services inflation is typically more sticky than goods inflation. So that's been the target. Obviously, the way to deal with the policy levers to deal with the supply shock-based inflation is more fiscal, is more trade, more industrial policy, etc. So that's the key part. But having said that, there is usually a transmission mechanism from headline food or non-food based inflation back into the core inflation is seen quite often. So that remains a worry. The second part, one of the key transmission mechanisms, is that inflation expectations household inflation expectations typically tend to get unanchored with continuing high food inflation, although immediately monetary policy levers like the repo rate will not tackle supply side inflation, but it feeds into inflation expectations, which then makes monetary policy even more difficult. So it is not a straightforward binary that, I mean, food versus food, fuel versus core inflation are the key things for different aspects of policy, monetary, fiscal, etc., because they all tend to get intertwined together. But on a very simple level, the key function of monetary policy is both to control core inflation and thereby, to a certain extent, inflation expectations.
Madan, given how the last leg of the monsoon performed, do you think that the risk to cereal pricing remains, and that is something that the MPC will be watching out for?
No, I think the risk to cereal inflation very much remains, because it's not being driven so much by how the monsoon has performed, but there are other underlying policies which have come in the way of cereal prices going up. Like, for example, we talk of the MSP, it always lends an inherently upward pressure on prices of all agricultural commodities. So this is something which I feel which requires a review, because as long as you keep increasing the MSPs, we're actually contributing to inflation. Because when you give the farmer a higher price, it's but natural that the consumer has to pay for it. It's a zero-sum game. Similarly, when you're going in for something like export bans, I think that is something which was also done for both wheat and rice. I think automatically the sentiment which is sent in the market is that there is something amiss in terms of production, and that itself is something that starts pushing up the prices. So I think cereal inflation is something which will be very much on cards, something which has to be monitored, irrespective of the fact that the area under cultivation of the rice, for example, is higher than what it was last year. So presumably we may be getting a better output. Again, one is not quite sure about if there's been any part of the crop which has gotten damaged on account of this excess flooding which took place in the month of August. And even as we speak today in October, there has been some cases of flooding in certain parts of the country. Now, whether the crop has actually been affected or not, we really don't know. But even if we assume that we're having a normal crop, that is a minimal or a minimal kind of a growth which we're seeing in the production, there will still be price problems, and that is something which will be on the minds of the MPC members, because you cannot rule out the fact that we can be having high cereal inflation translating into high food inflation, even though we have a good crop. And that's because inherently the system is such that it lends an upward bias to prices every time we say that we need to look at the interests of the farmers. And that's what our policy has been so far.
Shogato, how closely have you been following crude oil prices? Because since the last meeting of the MPC, they have risen nearly $10 per barrel, and there is a lot of uncertainty with regard to how prices will remain over the next 3 to 6 months.
So you bet. Crude is always remains a focus area for all economists, because I mean that's something that is a very global phenomenon, not too much that we in India can control. Typically, the rise that you mentioned has been due to an expected demand-supply imbalance. So more demand than expected, less supply because of the OPEC plus cuts. There were multiple reasons. I mean, the US oil inventories were very low, which raised their WTI benchmark. The US strategic petroleum levels were about 50% of what, 50% of what they were in 2021. So that was again a factor that the US would try to build up its strategic petroleum reserves, etc. And then there are the OPEC, the 1 million barrels per day extended cuts now that have been extended to December. Yesterday, a couple of days back, there was a report from the US which said that US demand on a continuing 4-month basis had fallen to lows. And inventories had also crept up. So that was the reason for the sharp drop in oil prices. But overall, if China begins, there are signs that China has stabilized, it has bottomed out, and it will slightly and slowly begin to pick up China's growth. That will increase demand for oil coming in from China. So I think the overall balance, the demand-supply balance, given the supply cuts that OPEC Plus is trying to do, remains very tight. US shale oil has not come back. So the expectations are that even from this low level of $85 a barrel that we have seen yesterday, it will begin to creep up again to the 90s, but hopefully, difficult to predict at this point in time. Hopefully, oil will not touch 95, and again, I mean, let alone as many market commentators had said, going towards 80. Remember, it's not just a physical demand-supply balance. There is also oil is a very important financial commodity. So traders take positions on oil. So the sharp drop that you saw yesterday was also traders cutting their long positions that they had, the speculative demand for oil. They cut back on that program. Now, if there are signs that again this imbalance is going to go up, again, speculative demand for oil will also not go down. So it's difficult to really take a call on where oil would be. And we are waiting to see in tomorrow's monetary policy report from the RBI what their average assumption, which they had earlier taken at $85 a barrel, how that is.
Very clearly that will have to change, because the trend is pretty clear. Madan, I'm coming to you, and the US dollar and bond yields have been on an uptrend. What kind of higher for longer interest rate stance will have an impact as far as the Indian central bank is concerned?
So actually, what we have seen out here is that there are always expectations that the Federal Reserve is going to keep increasing rates. So I think that is one of the factors which makes the dollar stronger. This goes along with the news of saying that the American economy is doing much better than what was expected earlier. So as long as this kind of a trend remains, I think there is a tendency for the dollar to strengthen. And as the dollar strengthens, we have seen all currencies have been weakening. And that's how we saw that even the rupee started weakening. Now, this happens both because of the sentiment factor, as well as the fact that the investment flows start reversing. So that's also something which we did witness in the month of September, where we saw the FPIs, especially in the equity segment, turning negative. But of course, there was some compensation which came through from the mutual funds, so we're not totally dependent on there. But definitely the kind of turmoil which we see in the forex market, the volatility which is coming in, is primarily being caused by that. If you remember last year also, we had a time when the euro-dollar parity had reached a parity level. Now today we appear at 1.04, 1.05. The question is that until such point of time that the Fed actually says that there are going to be no more rate hikes, we could be expecting the dollar to strengthen further. So what the RBI has been doing all this while is to ensure that there is an orderly kind of a depreciation which takes place, because it's a very tricky situation for any central bank. To let the rupee fall, which could help the exports, but no, that could actually lead to a panic situation becoming self-fulfilling. On the other hand, if you don't do anything, that could also be interpreted as the RBI happy with the depreciation taking place. So we've seen a limited amount of intervention coming from the RBI, also something which gets revealed when you look at the forex reserves, which have been falling at a very gradual rate. But these are the kind of actions which will be taken by the Reserve Bank of India to ensure that the rupee remains less volatile, but at the same time continues to depreciate in a limited manner so that we don't lose out on that export competitive advantage. Because this is a very tricky situation where the global economy is not really doing that well. Our exports are also not doing well. We're not an export-oriented economy, but we definitely don't want to lose out on the advantage on the price side being caused by the currency. So I think a lot of forex management is happening, and that's another responsibility which the RBI has taken.
Shogato, what kind of commentary are you expecting as far as the rupee is concerned from Governor Das?
So he's not going to comment on the rupee. So they have typically made it a policy decision not to talk publicly on the currency, except for the standard statement that they are well prepared to manage currency volatility. Unwarranted volatility in the rupee hinders other monetary policy instruments. To that extent, they will repeat that commitment. But they have shown the intent and the capability of managing volatility. In other words, I mean, they have actually held the rupee. If you see the charts, the rupee has been remarkably stable, even with the Chinese yuan, the renminbi, going all over the place and weakening significantly. The rupee has held its ground. So other than that, they're not going to publicly, explicitly comment on the rupee, but it is a difficult decision on how to manage the rupee. Because remember, one of the key things that had happened earlier, particularly during the June to November, the huge strength in the dollar, some of which you are beginning to see partially now in the dollar. It's really futile to try to push back against the rupee in the face of an unwarrantedly strong dollar. So they typically, during those situations, let the rupee go slide very, very gradually. But if it's other factors, like oil and the others, then they have demonstrated the intent to manage volatility, to keep the rupee relatively stable. And to my mind, I think the dollar will not go significantly stronger beyond what they are in the levels. It will go because the euro area is not doing well, the UK is not doing well. So against the other global measures, the DXY, the DOLX as it's called, is going to go up a little bit. To that extent, to my mind, this is speculation, that the RBI will probably allow the rupee to match over a period of time the strength in the dollar, but there will be no explicit mention of the dollar. I just need to mention one thing, that the liquidity stance will be tied to the currency, because excessive amounts of liquidity will allow the speculative positions on the rupee to be built up. So the implication of a gradual depreciation in the rupee is that the liquidity is going to be kept tight.
Madan, the government has taken various supply side measures, and that seems to at least have helped stabilize retail food prices. Do you think the MPC will take satisfaction from what the supply side has done so far?
No, I don't think the MPC will again comment on that. It will be more a case of describing what all has been done on the side of the government to control food prices and inflation, both in terms of augmenting supplies through open market sales or any of the other measures, stock limits which have been placed, or even maybe the export bans. So it'll be more a narration of whatever has been done on the central side. But I think really just the MPC or the RBI actually comment on whether it's good enough or is it enough or more has to be done. I think they will stick to their own task of targeting of inflation and using the monetary or whatever measures are there in their hands to try and control inflation, or give signals to the market also about liquidity and how what they perceive would be inflation in future based on their forecast, which they draw up, which could actually give some kind of signals to the market as to what could be the future action of the RBI. But I think one issue which I would like to mention out here, not really to do with inflation, is the liquidity issue. Because last time we had the ICRR, which created quite a bit of chaos in the market, because ever since we had the ICRR, we saw that the surpluses in the system turned into a deficit, which we are right now. ICRR has also been reversed. Conditions, of course, have changed in the last couple of months. But I think I would be looking forward to see, in case there are any specific measures on inducing liquidity or controlling liquidity. So this entire stance of withdrawal of accommodation probably should be explained, maybe not directly in terms of what the term means, but also in terms of what measures could be used in order to ensure that liquidity remains stable. I think that's something which the market will be looking forward to.
Shogato, one quick point. Would it be correct to read the situation so far, and what both of you have been saying is that while there are concerns around food inflation and obviously crude oil inflation, those concerns are not enough to get the MPC to even consider a hike?
No. So again, as I said before, that a broad, blunt instrument like the repo rate is not the optimal instrument to tackle supply side shocks. Having said that, they will be monitoring the situation, because it's not just the prices of Indian rice or wheat or cereals, etc. Globally, food inflation is beginning to rise. One, the export policy restrictions imposed by various countries is leading to a problem, particularly with rice. The Black Sea grain deal collapsing is leading to a problem with wheat. A forthcoming expected El Nino situation is going to play havoc with palm oil, edible oils prices. Sugar production in Brazil is likely to be impacted. So there are multiple agri-commodities which are likely to face upward price pressures. On top of which, metals prices will also probably rise, particularly if China growth begins to revive. Trading positions in metal prices are significantly higher. So these cannot be ignored. Although I do not expect, without a serious shock, a price shock in any of these commodities, that the MPC will raise rates, but they will probably try, they will monitor how much, particularly fuel prices at the pump, petrol, diesel prices, food prices in the markets, etc., how much they change household inflation expectations. And if it seems as if it's going beyond control, then there is a remote possibility that a policy hike might follow. But I do not see this happening in the near term.
Fair enough. Madan, I'm coming to you on a separate point, not about the MPC, but an assessment by BOB economists that the ICC World Cup could add 22,000 crore rupees to India's economy. You have that graphic on the screen, viewers, Cricket World Cup and Indian economy, the kind of ticket sales, TV rights, teams spending, foreign and domestic tourists, event management, merchandise, the money that spectators will spend, all of that together. Take us through this interesting take on India's national passion of cricket.
Yeah. The national passion of cricket could actually be a kind of a GDP booster, energy booster for the country. So just looking at it as economists, we say just let's look at the World Cup, nothing else, because I have to preface this by saying that money spent out here could also just mean that people spend less on other things like your festivities, which are going to come along from the end of October. But assuming that doesn't happen, so what we did was we looked at the various aspects of all kinds of spending which happens during a World Series, a World tournament like this one played in India, took tips from what happened in the 2011 World Cup and more recently what happens during the IPL time to find out as to how many people attend, what are the costs of tickets, what are kind of average spending done, not just by the teams and tourists, but also we looked at what happens behind the doors. I mean, what we do when we can't watch a match is that we order food at our homes and watch it at home, or we go over to a pub, or we go over to one of these fancy restaurants which has giant screenings of these matches and what kind of spending takes place. So based on all this, what we really concluded is on a conservative basis, because in terms of numbers, we have actually restricted it to the 10 cities where these games are being played. And then come to this calculation that overall spending could be in the region of 18 to 22,000 crores. Of course, there are certain things we have to keep in mind that when we are talking of sponsorships, like when a particular cricketer is being paid a certain amount of money for endorsement, it would be a full year contract, but we are not able to segregate as to how much of it would be only for this World Cup cricket. So we have taken a proportion of that, judicious proportion, so that we don't overstate the numbers. And that's what we've come to this conclusion of 18 to 22,000 crores. But it should not be mistaken for GDP because value added is only a proportion of it. So we actually classified all these expenditures into different parts of our GDP calculations and seen what typically is the value added ratio to the gross output or the gross spending. On that basis, we conclude that your GDP could be increasing by something like 7 to 8,000 crores. It may not be a very large amount, but definitely for 2 months, seeing 8,000 crore rupees being added to your GDP is something which is noteworthy. So that's what we have actually put across in this report. So just like how people have been talking of the Taylor Swift movement in the West, where it provided a booster to the American economy. So we could probably also think that of this particular event giving a similar kind of booster shot to the Indian economy. So on the whole, it's a very positive impact, impact on economic activity, because especially the services sector is going to be reinvigorated. And just at a time when we are saying that the pent-up demand, which we saw in services last year, could start getting diluted, I think there is a fresh lease which is being provided by the World Cup. So that, in a sense, is what our study showed.
I'm glad you did that because this comes at a time when Taylor Swift and her tours have added or said to have added $5 billion with all the entertainment mega events that she has done. Shogoto, I wonder if you want to come in on that, and did you get an idea to do something similar some other time, really?
No. I hope Madan's optimism in this is justified, but it's not going to happen because remember, this is just a transfer. It's only the foreign tourists who come in. The Shakira, Taylor Swift's concert in Stockholm reportedly added 1 percentage point to Sweden's GDP. But that is only because of the influx of foreign tourists. What Madan and you will be spending additionally in Ahmedabad or whatever in Delhi out will be monies taken out of Mumbai and Delhi into Ahmedabad, into other locations, other venues of the World Cup, but it's not going to add up net.
Shogoto, why are you keeping yourself out of that possible spender list? Why is it only me and Madan?
No. I mean, you guys know my relative wealth.
Well, cricket is something that goes beyond socio-economic classification in India. It is a religion from the richest to the poor, and we'll hope for a good World Cup viewers. At least that will lift some of the moods because clearly, as far as the Monetary Policy Committee and the Reserve Bank of India is concerned, their mood is going to be pretty somber, I would say, while watching inflation and what is happening in the world of crude oil. Madan Sabnavis, Shogoto Bhattacharya, thank you very much for your time with us on the show today. With that, it's a wrap on this episode of Easynomics. Remember to log in, to tune in and watch our coverage of what the Monetary Policy Committee announces. Clearly, it's a continuing pause. That is the unanimous expectation. Thank you very much for watching.
the market will become a stock specific. So we are seeing a lot of companies announcing a